to look more at the changes to superannuation as well as the latest retail figures. Let's bring in Stephen Hamilton, Assistant Professor of Economics at George Washington University. Stephen Hamilton, great to see you as always. First of all, the superannuation changes won't come into force until after the next election. What do you make of them?
Honestly, Kieran, I think it's pretty good, and I don't think many people could argue that people with more than $3 million in their super account, most people have a couple of $100,000, are worthy of receiving a pretty generous discount, right? So if you're on the top bracket, you're paying 45 cents in the dollar. If your money's in super, it's only paying 15 cents. And what this change does is takes it up to 30, which is still a big discount over where you would be. And I think even this minor change earns the budget $2 billion a year, which I think is a good signal that there's a hell of a lot of money in super tax concessions to go.
And in that context, the Prime Minister saying no other changes in this term. So basically saying that if there were to be any move, it would go to the people first. He's clearly said that by having this change start in 25-26.
Yeah, there's no doubt he ruled out changing things during this term. And so it's good to see that the changes wouldn't be introduced until after the next election. I think that's pretty smart, frankly. But this is only the first, right? They haven't been in that long, not even a year. And we've got those big stage 3 tax cuts that are due to flow in a couple of years. And it'd be hard to think that won't be the next thing to the next cab off the rank.
When you talk about the concessional rate, as you rightly point out, those with balances over $3 million, this is for $3 million and over. The concessional earnings rate goes from 15% tax to 30% tax, and therefore, right, as you pointed out, still concessional. Would that then prevent any exodus of funds from those affected accounts in your view?
Well, it's actually not clear, Kieran. So the press release doesn't make clear whether this will apply to superannuation funds in the retirement phase. So when you're in the retirement phase, none of the earnings from superannuation are taxed. So the tax rate is 0 on everybody. And I presume that we're not going from 0 to 30 cents on retirement accounts above 3 million. But for if you're in the accumulation phase, that is, you're in your working life and you're contributing to super, we've raised the tax rate on super accounts above 3 million from 15 to 30. Well, you can't pull the money out, right? Your money is locked in super until retirement. So one of the upsides of this policy in terms of revenue is that you don't have to worry about a behaviour response because the money is locked. It's like shooting fish in a barrel. What it could do, though, is discourage people from chipping in extra now that they know that additional contributions won't get that concessional tax rate. But, that's life. You can't raise tax revenue without any kind of consequence.
The release of the tax expenditures and insights statement, what's your take on that? It was across a broad range of the budget. A big chunk was superannuation. They've only touched a fraction of that. Is this a wish list, do you think, from Treasury to say this is what else we've got to rein in?
Well, look, we've got a new government. That they didn't have a big agenda coming in, but they had a big agenda in the past that involved some of these tax concessions. And so I think the Treasurer is doing the right thing by saying, let's at least get the information clear. Let's have a more comprehensive look at these things. And that lays the groundwork for maybe doing something later. And that's his prerogative. A couple of points I would make. One, tax expenditures are really difficult to define. Andrew perfectly nailed it before, top marks, What's a tax expenditure? Well, if I said I'd tax you, but I'm not going to, is that a tax expenditure? It's hard to know, what that benchmark is. And so there can be a big argument about what's included. But I think the other thing is, there are some big tax expenditures not included in there. So franking credits, again, Andrew mentioned. So, we need a bit of time to absorb it. It's a good measure, but I would say some of the kind of staging on the Treasurer's part was a bit funny, right? We had this $3 million super idea floated out in the media for 2 weeks, allowing a kind of speculation and head of steam to form over what they would do. And then they dumped the tax expenditure statement with actually a tax measure on super that looks pretty reasonable. So kind of sloppy on the sales job.
When we look at the other economic news today, I'm really keen to get your thoughts on these retail figures. Is it going to lead to the RBA moving not just another rate hike, but potentially 0.5%?
Yeah, it's sort of rumours of the death of inflation were greatly exaggerated, I think, based on these numbers and also on the pretty hot inflation numbers that came out in December. I think this says to us that the rate hikes to date just haven't bitten as hard as I think the Reserve Bank expected. And so they are probably looking at these and having to have a rethink about just how high that terminal interest rate gets to, which is kind of the key number. Two things I would note. One, the RBA started too late. Right? They didn't start until the election campaign, so well after other countries started and well after kind of demand was high. And they only started with a very small rate increase of 0.25, and then they only kept up the 0.5 increases for a few months, and they dropped down quite rapidly. So I think when you look at all of that, the accumulation of that, it means that rates haven't actually risen that high in Australia, certainly not as high as they need to, and not as high as in other countries. So the US Federal Reserve, for example, currently has an interest rate that's around 1.5 percentage points higher than the Australian rate. What that means is our interest rates are a lot lower. That causes a big shift in the Australian dollar and actually makes the inflation problem here much worse, right? So in a sense, we need to increase rates to keep up to try and control inflation. And I think that's where we've let down. So I'd expect the rate rises to continue and the terminal rate, our expectations probably should be revised upwards a bit.
Professor Hamilton, live from Washington. Thanks. Talk to you soon.